what are the biggest challenges you faced when you started your property investment journey? This is two questions. And your tax accountancy business, and how did you overcome them?
I'd say they're both the same thing. I guess it's anything. It's always the cost of ignorance, the skills deficit. You don't know what you don't know, and that's definitely the same in business as in property and anything else. And the way I overcome them was basically just finding people a couple of steps ahead, networking, and putting that conscious effort into do as much knowledge, basically become as knowledgeable as possible, network with others, and find people that are just a couple of steps ahead, so they can say, okay, yeah, watch out for that pothole over there, because if that wasn't in place, you are going to trip yourself up, especially in property, especially in business. The cost of the ignorance is massive, so you've got to kind of do as much as possible to plug that.
Absolutely. So how are you able to overcome this then? I know you said you got your mentors and coaches. I like the way you said a couple of steps ahead of you. That is a very key thing to do, because the massive mistakes lots of people do, they tend to find someone who's way miles away from them for where they want to go. They're very good for inspiration, don't get me wrong. They're very good, right? You can look at someone who's doing really well up there and say, whoa, I want to be like that person, or I want to replicate what that person is doing. But from my experience, if you really want to learn, look for someone who's like maybe a couple of steps ahead of you, as you just said, because they can relate to you a lot more than that person that are kind of maybe 1,000 miles away from you.
Yeah, exactly. So, because when they were in business and property, I guess the biggest lever you always have is time. The longer you're in something, the more successful and the great returns you'll get. So especially if you go for somebody so far ahead, well, actually it might have been 10, 20, 30, 40 years ago when they were in the position you're in. And obviously the market, the technology, everything is so different then. So if you were to go to Elon Musk and say to him how to set up a VSL to sell your online product, he is probably not going to have a clue. Very intelligent guy, runs all his companies, but he's not going to help you with that specific problem you've got. Whereas if you go to somebody who's literally just did that and has scaled that in their business 2 or 3 years ago, they will know exactly what to do and basically give you the shortcut to success.
What motivates you to shift from a 9-to-5 job to being your own boss and become an entrepreneur?
So it was always the plan. So even literally, especially when I look for this, is kind of what's powerful about the law of attraction and kind of how you kind of attract things in your life. Like as soon as I left university, I was kind of writing out, okay, we'll do 2 or 3 years working in an accountancy practice, get the qualification, get the trainings, then start and leave my firm, start my own firm. And that's exactly what I did. So it was a case of, I knew that I was never going to be an employee forever. It was actually, I was in accountancy, I was in tax, so I had to do the experience side to get the professional qualification sorted out. But it was always just a stepping stone, a temporary measure, because I knew that actually business was always the way to go.
Yeah, I like that, because I had the same perception as well. One of the reasons why I did accountancy is wanting to know how businesses run, how businesses operate, because it was fascinating to me. I've been thinking, how are this company making all this money? How are these people being on private planes, private whatever they is, they're being these jets and doing all of that. That intrigues me. But when I get to finish uni and start working for people, that I thought I was corn or maybe lighter, because what I realized at that point was I could have actually become an entrepreneur, a business person, without going to uni, learning all this accountancy stuff. Because I could have either learned by being an apprentice, or maybe employ someone who's very good at it to do it for me, instead of me wasting 40 to 50,000 pounds doing that. So I kind of understand where you're coming from talking about that. But what would be your advice, or what would be your advice you could give to someone who is interested in starting either their property investment journey or their business, but might feel intimidated about the numbers, about the figures, or how to run businesses, tax and all that sort of thing? So what advice would you have to people like that?
Yeah, I guess with that one, I suppose that's not really your problem to worry about, because in business, 99.9% of the time, you're going to hire an accountant. So your main role in business, especially just in the early stages, is making money, making sales. And off the back of that, of course, to make sales, you need a good product. And with the good product, you need to market it to get the sales. That's really what you should be focused on, the stuff that you can't really outsource to somebody very well. Whereas the good thing about accountancy and tax, a lot of the time you can just outsource that to an accountant who knows all the legislation, will help you pay less in tax, monitor all the deadlines for you, and even bookkeeping, they could literally do all of it for you. So it's a case of, yeah, absolutely, you might be worried, you might be anxious, but just get a good accountant on board as soon as you can and let them worry about it. You focus on growing the business, hiring talent, marketing, closing sales, because ultimately that's going to be your skill set and where you're going to add the most value to the company.
I'm about to start a business.
Yeah.
And I am okay. I'm doing really well for myself. I'm working for a firm, and I want to start my business. So what would be the best tax efficient way to start that business? Let's say property investment, for example.
Yeah.
So what would be the best way for me to start my business, knowing that, having tax perspective in my vision, in order to minimize the tax I pay?
Yeah, quite often, especially
legally.
with business and property, quite often a limited company is still the best way at the minute. Of course, with property, a couple in your own name, if you only want a small portfolio, can be good. But for the vast majority of people that do want to grow and scale the business, a limited company is still the best way. And this is kind of where you can get tax efficient and have the best structures, where you might have a group structure. It's the kind of thing we set up for clients quite often, where most often you've got a trading business, one that's generating cash flow. It might be a marketing agency, online courses, whatever it might be. That's your kind of main business that pays the bills. Or in property, that might be deal sourcing, rent to SA. It's the cash flow generating activities. You have that as part of the holding company, and then the second company that comes off of that is your property investment company. And because you've got that group structure in place, you can just move money around tax efficiently. You're not going to worry about taking dividends out personally to move it over to buy a property with. So that's the kind of structure that a lot of people, if you are looking to set up a good cash flow business, buy a lot of property and build wealth, that's probably what they should definitely have on their radar.
Okay, good. So talking about group structure, suppose someone's got an online training business. Let's say maybe they have a GCSE training business, or they just have a training business, right? Is it ideal for them to set a company structure, a group structure that uses that training business, as I said, cash flow, in order to invest in create another company that would allow them to invest maybe in property, for example? How does the tax implication work? So what sort of benefit do they get from doing that?
Yeah, so that's the kind of main thing, is they get the money out of the trading business, because if you've got a lot of money, or you were to loan it from your trading business to your property investment company, that's risky. At the end of the day, anything happens, you sell the company, that money might need to be repaid back. Whereas if you've got that group structure in place, you just pay it out as a dividend to that holding company, that's completely tax-free. And then the holding company can then loan it down to buy a property. And then this kind of second best thing about having that group structure in place is, if you've got a trading business, that group that owns the company can actually sell that completely tax-free. So say, for instance, you start to build wealth with property, or relate to me, somebody comes and, hey, Josh, I'd love to buy your company off you. We'll give you £5 million for JSM partners. We know you've got enough real estate now, that's fine. So what would actually happen is that you would pay zero tax, because there's that group structure in place. The group owns the trading business. You could sell it, get the full £5 million cash in the bank without any tax, because you've got that group structure.
Right. Okay. So with that group structure, then, because I want our viewers to understand this a bit more. Suppose then you've got your GCSE training business example. It is cash flowing you, and you want to invest. You want to create another company that probably you want to start acquiring properties, so to say. So will you put it in form of a group structure then? So whatever the other company invested in that company, suppose say dividend, for example, is that dividend tax free, or you'd have to pay tax on that dividend?
Yeah, that's right. So in that case, the dividend will go up to the group company tax free. It's out of the trading business, out of harm's way, effectively. That's tax free. But of course, if you were to then take dividends from the holding company, you would pay tax on that as a dividend, just as you normally would.
Okay, but as long as it's moving within the companies, there's no dividend tax on it.
Yeah, that's right.
Right. Okay. Suppose then you've got that company, you are making money, right?
Yeah.
And that company generates serious cash flow, right? And you know then, with that money, if your year end, for example, comes in, then if you haven't reinvested that much money, that some of that money you may get hit by tax, either corporation tax, or maybe if you want to pull out dividend to maybe pay yourself, right? So if you were to use that proceed, not say proceed, I'll talk about cash flow here, right? To reinvest then in the other company to acquire more assets, that then effectively means you've got less than profit into the actual company, right? Do you get taxed for the investment you've made in the other company if it's not debited?
Yeah. So with that one, it's because you'd always pay the corporation tax on the actual trading profits of the business. So if you were to reinvest in property, usually that wouldn't qualify unless you were buying property in a trading business. You might get some kind of tax relief on it. So you'd pay the corporation tax, and then it would move over. So you wouldn't kind of get that. You wouldn't get that second tax benefit because HMRC, you only ever get that tax deduction on the investment when you actually sell the property itself.